Wednesday, December 20th, market analysis, Stan Ehrlich. And today is the first day of the Santa Claus Rally, and we're in a trade, and it's doing pretty good so far. We'll get to that in just a moment. We start out with the stock market indexes always. Here we have the E-mini March futures contract, new high for the trend. You realize that we have been up 9 at the moment, up of the last 10 days, and only last Friday on a little dip where we lower on a closing basis. Otherwise, the last 9 out of the last 10 days, we have been higher. Ever since this bearish engulfing, which obviously didn't work, and we had a small loss, it has gone straight up. We are now having an RSI reading of almost or right around 90, which is extremely high. And I am very concerned that this Santa Claus Rally is not necessarily going to do well this year. I have to say that because of the overbought conditions we are ending up in right at the beginning of what is supposed to be a continuing rally for the approximate next 2 weeks. Now, we could have a break, a dip down, lose some money for open trade equity on the Santa Claus Rally trades shortly before and or after Christmas, and then have another rally into new high ground to turn the Santa Claus Rally positions into profitable trades. We will be getting out of these trades on the first, second, and third trading day of January. And I'll give you the exact time of day for entry and exit. If you want that information, I'll be more than happy to send it to you. Ask me at info@ersignals.com. That's where you can reach me, info@ersignals.com. You want me to analyze a particular stock, commodity, crypto, forex, I don't care. Maybe I'll get the chart on the program for you. Otherwise, the Santa Claus Rally details, historical track record, etc., is available. Now, next chart. And the E-mini should be topping out anytime soon, but I'm sorry to say I've been saying that for 2 weeks, and it hasn't happened, and now we're long because of the Santa Claus Rally rules. Next chart. Spider, same situation, up very, very, very close to some important previous tops in the market. We are extremely close to making new historic highs for the S&P 500. This is the top of the market back here at around, let's call it 480.50. And we're 75 at the moment, 5 points approximately from that price, only up 89 cents for the day at the moment. Super close to that historical resistance important high. And we have, for all practical purposes, now reached the minimum upside objective on what was a good looking, at first, head and shoulder bottom, which started in June of 22. October lows was the head of the formation, October 13th of 22. And the last shoulder low was on December 22nd of 2022. But this formation got all screwed up when it started to go back down below the neckline, which is not supposed to do for a matter of a couple of 3, 4, 5 or so weeks, which is much too much time and much too much of a decline. So I dropped the head and shoulder pattern as a tool to use for price objectives. And here it is. It worked anyway. So that happens. Not very often. Usually when you drop below the neckline on a head and shoulder you've already broken out of, it fails completely miserably and either goes sideways or a lot lower. That didn't happen here. Now, overbought, super, super, super overbought, and looking like perfect conditions for it to turn back down. It just won't do it yet, but I know it's coming big time. That's what bothers me about the Santa Claus Rally this year. So far, so good, though. Here's the 1-minute chart on the spider. It just made this minute new highs for the day, new highs for the trend, and super close to those new historic highs. and fulfilling that upside objective. Finally, DIA, new highs on a daily chart basis continuously. This has been an extremely strong, unusually large rally. You have to understand that we were really down here getting oversold at 323.10 at the end of October. So all of November and so far all of December has been strong or steady and strong and strong and steady. It just keeps climbing. So although it's being delayed quite a bit, the technical correction is going to be maybe a significant one here. Next chart. And I'm not bearish. This is a downside correction I'm looking for in a bull trend. So after that's over, I think we're going to see new highs in January, February, March. Okay, Russell 2000, super close to major resistance levels. So far, all of the resistance levels have been broken, but we did leave a little gap behind on the Russell a few days ago, and that gap may get closed very soon. Next, Qs. Same story. It's a broken record. It just keeps going and going and won't stop, which is highly unusual. So I'm looking for a correction very soon. And we're going to go to the NASDAQ futures. It left a small gap behind. There are a few tools to use to look for the low of this downside correction, which is almost, it has to happen, in my opinion. Next, Russell 2000, 1 minute. Minor double top for the day so far. Really hasn't started to do anything significant yet. Let's go to the Santa Claus Rally for today, the first day. For those of you who are paying attention, we were supposed to be buying at 7:05 California time, and this is the opening of that 5-minute bar. We're long at 474.90 on the SPY. It has just made a new high and last for the day. We are long now in profit of about 90 cents, almost a full point. Everything I've said before applies. Frankly, this is my opinion. Because I'm very concerned about the overbought conditions, my protective stop would probably go at 475, maybe 474.99 or 475.02, something like that, just so I don't take a loss. Because I'm very much concerned all of a sudden this thing's going to start to head Tierra del Fuego, head south, and I can buy it cheaper, maybe in hours, or maybe a day or two. Next chart is the futures charts. Okay, we're going to go to the E-mini, a little bit different perspective. Support area at lower levels. I'm expecting it to come down to 4,660-ish, and probably a little lower on this technical correction I'm expecting anytime. But again, I'm getting quite frustrated, of course. It's not happening yet. Next, NASDAQ, same thing. Come back down to support. Old highs, typical situation. Bonds, trying to top out at a resistance area or just a tiny bit above it, and should, in overbought conditions, have that correction along with the stock market indexes. So they match, but neither one of them are starting to go down. Now, we're still long 10-year notes, so the trade is still making more money. I'm not complaining about that. I'm just complaining about the fact that my expectations aren't working out quite right. And I've had a little practice at this, so it upsets me a little. Now, if we do start to come down below yesterday's lows on the 10-year notes, you'll see that it's yellow, overbought, and we'll get a red sell signal. That would be exactly what I'm looking for. Next chart, crude. Got up to resistance, not particularly a great level. Having a little trouble here. Back down to unchanged, or almost unchanged, where it opened. And we'll see what happens next. I expect this support area to maybe have a little bit more oomph to it. And I'm not going to be surprised if we can get back up to 80. But this is a very big sideways situation. Not much of a great trend to it. frankly, on an intermediate to longer term basis. And between a rock and a hard spot seemed to be an appropriate comment. Natural gas oversold, rallied. Maybe the rally's over. Tried to make new highs, didn't do it this morning, although it got up right close to it. And that was just Monday's high. And now everything's turned back to negative on the day. We could make new lows here soon. That may be all the rally you're getting out of this at the moment. Next, heating oil. Touched exactly the top of the resistance area and now lower on the day. This could be the high day. Intermediate short-term trend down in this wedge or pennant. And some people would like to call it a channel. If you drop this line down to here, maybe you can justify, it's still a wedge, no matter where the line is across the bottom. This looks like it's a more appropriate one because at least 3 points. It was broken, but then we're back in here again. So I think this wedge pattern is probably defunct at this point, gone. Worked fairly well for a while, especially at the tops. Look at how many times it bumped up against that line, or when it went through it once, it didn't stay there and totally reversed with a bearish engulfing. That worked pretty well. So neutral at the moment. Gold, gigantic bearish engulfing, scream bloody murder on December 4th. I think the rally that we have had with the high last week is over. We're about to have a bearish engulfing. It looks like all we got to do is go a little bit lower than today's low so far, and then you will be above and below yesterday's range and around the top of that resistance zone, and probably starting to head into new low ground below 1987. I wouldn't be surprised to see it test 1955, and I certainly can't rule out the gap closure way down here at 1870. But let's see if we can break some of these other lows first before I get that bearish. Next, silver. Basically the same kind of comment, except we have a new high and maybe a new high close on this rally today. Now, I doubt the silver is going to trend over weeks and months higher while gold does the opposite. So I think silver's about to flip-flop right back down again and catch up with gold a little bit. That reversal was on the exact same day of the reversal in gold and at a resistance area. I think it's going to be more bearish than we have seen so far, although, it bounced off support pretty good. So looking for a turn down in silver and gold and probably platinum right at resistance right now. So all three precious metals, I think, are going to turn down again. Next, high grade, copper. I got to say the same thing about copper. Maybe it's got a little bit more strength into the resistance, but probably not much. The trend here is a little sloppy, but basically down. And that would be since the very beginning of the year. So it's been one full year, essentially. Lower lows, lower highs. And here we are at resistance. So love to see a bearish reversal. Next, soybeans. Bullish reversal at the bottom. Whenever you see green, it means buy. Whenever you see green, it means buy. Whenever you see red, it means sell. And so that didn't work. That one was okay, not great. That one didn't work quite right, but it was green during the bottom. That one worked very nicely, green close to the bottom. But I built a strategy to pick turning points like that one. Of course, you don't get very many of those. In a whole year, you might get a few or several at the very most. But the strategy can pick them. You've seen it. I'll keep doing it. Next, soybean oil. We got the top of the market in soybean oil, and it was the second high in a double top. So not only did you have a great formation, but you had a sell signal. Now, remember, the ER signals can be used as a guiding light. You do what you want to do when you want to do it. But if I get a buy signal, maybe that will help you decide to turn bullish and allow you to make a little bit more money otherwise. Or you can take the exact automated, 100% automated trading signals and just let it do its work. And that probably would get you into trades a little better, a little quicker, a little faster. Next chart. soybean meal. New low for a while, major resistance, broad double top potential. Remember, you have to break these lows here in order for the double top to just get started. So far, you've got the two highs and you're sinking back down to where it had support before, and that still is support. The whole point is, if you break that support, the double top is going to kick in and you're going to go all the way back down to the lows, maybe even lower than 280 that we had back in May. Next chart, corn. We're out. We made a little bit of money with the long position, a slight disappointment, but still a profit. And now it's making new lows for the trend. So it's going to go the way of wheat. And I've been saying that for months, even though buy signals may have worked slightly or maybe not at all. This one worked slightly. I'm not, and I said I wouldn't expect any major bull move yet. I don't see any major bull market. Only periodic oversold conditions and a periodic bounce, signal or no signal, as a result. Next chart, wheat. We're looking at support being tested slightly, nothing major. This is the bear trend since the war started. And when the war started, back over a year ago on March 9th, we had an incredible March 8th bearish engulfing ER sell signal on the top of a market that was screaming straight higher, locked limit up bid all day long for a few days before it fell apart. I saw it in the Russian grain deal in the early 1970s, and I can't believe I've seen it again now in 2024. 2022, a couple of years ago. All right, next chart. I'm still long-term bearish on wheat, can't help it. Cattle, buy signal, last Monday, this week. Friday of last week. And we bought it when it came down to the approximate middle of the range of the signal. That is our buy signal for ER3. That's our buy level trigger price. And now it's making a little bit of money. Today is the first day we're in the trade. It's 3 days after the signal, which is allowable. And we've got our stop in place. Let's see what this trade brings us. We had a whopper of a bear signal on the top of the market, and we only got out last Friday. Took an extremely good profit on that trade long term. You know, every time you see green, there's also a scalp trade. And every time you see red, there's also a scalp trade, let alone the position trades in both cases. So there's 4 actual trades, 2 ways to get into the position, ER1 or ER3, and 1 major signal. Next, hogs. Between a rock and a hard spot, basically bearish. You can't help it. The intermediate short-term trend since the summer has been down. Long-term trend is down. Looks like we're going to start to make new lows soon. OJ, today's the day that OJ, and that rhymed twice, is breaking out classically of its head and shoulder top. And we are in that trade. Let me move our equity plot here real quick. And there we go. So on the first shoulder of the head and shoulder top, we got a bearish ER sell signal that worked great for 1, 2, 3 days until it got oversold, bouncing off of support. Went right back up, made new highs for the whole trend. And again, it had a bearish ER sell signal at the top. And this could be any market. It doesn't have to be orange juice. It could be grains, interest rates, currencies, stock indexes, forex, crypto. It doesn't matter. So at the top, we got our signal. The next day, we got short ER3, screaming profit, new low and last right now. As we speak, best profit so far. We sold it short on November 22 and at around 417.70-ish. Here it is at 354.20. Next chart. I expect it to get to the support area, and I expect it to be oversold when it gets there. And I'm expecting to probably take a profit shortly thereafter or during the time that it's in the red zone here. Next chart, cocoa. Well, new highs for the whole trend, maybe a new high closing price for the whole trend, but I really need to have it close above all previous highs in order to look even more bullish. There's a bullish resistance line. Now that is a bull trend line, but not supporting prices underneath prices. It's a resistance line. That means it's a bull upward slanted angle, but above current quotes and stopping rallies as it goes up to and bumps from below that line, like we've seen it happen back there when we had a bearish engulfing that worked for a few days fantastically. This one worked okay. Nope, actually, I'm sorry, that was a bearish. Okay, that was a small loss, and there's a small loss. So I'm looking for a new short sale signal. We're not quite overbought, but getting close. I think we're getting close to a significant high. Might even come all the way back down to 3,740-ish, 20-ish, 3720-ish. Yeah, I wouldn't be surprised. Next, remember, bear moves come down probably 2, maybe even 3 times faster than it takes to go up. Much faster. Bull markets climb a wall of worry. Bear markets panic straight down. Coffee, panicking. Not that it's a bear market, but yesterday's big rally got overbought, and we have a big break today, even a little bit worse on the downside than yesterday's rally on the upside. But we're bouncing off support for the moment. So let's see if we can get down to and below this trading range. And if that's going to happen and we close below this red zone, then we're going to see significant increase in downside likelihoods. Next, sugar. New low close. But we have an outside trading range. At the moment, we're closing probably lower on the day. I've mentioned this fairly rarely, but I nickname this kind of a candlestick, which would be called a bearish engulfing. But because it's an oversold territory, I call it a bass-backwards reversal. It doesn't look bullish, but I've seen a lot of these things actually start something that causes the market to go back up again. So we're going to find out. Otherwise, I can't help it. Oversold conditions in an outside trading range look like it could turn back up. Next, cotton. Support. Let's see if it can break it. Intermediate short-term trend down, definitely. So I have to watch closely to see how the support level acts again. And back to the E-mini, which is pretty much high and last. And we're going to give it one more check here on the short-term charts. Well, we'll go to Santa Claus Rally chart. And this is the 5-minute for the spider. Made a high and then came back down and dipped a little bit. But we were almost exactly, almost to the tick, a 1 full point profit from where we bought it at 494.90, 474, excuse me, 90, 474.90 is where we're long from. And it's right now 475.60. Again, for today, probably I'd have a stop. My personal opinion, 475, give or take a tick. Anything interesting on any of these other short-term index charts? And going to the Russell, still minor little resistance, stop this rally. Nothing. You guys have a great day. Profitable trading to you. Please ask for the information that you'd like, or for me to analyze any particular symbol that you want. info@ersignals.com.